Hi, everyone. Thanks for joining us today on Tuesday afternoon. Jeff and I are going to discuss CT REIT, REIT standing for Real Estate Investment Trust.
Right.
We ended up purchasing this for our investors back in June 2024 as a contrarian purchase. Why don't you go through some of that information, Jeff?
Sure.
Of
So when we looked at CT REIT, it came on our radar screen because we wanted to invest in the sector. With interest rates higher and about to fall, we believe that the two sectors that would likely benefit the most are real estate companies and utilities.
Mhm.
Both those sectors often accompany contracted revenue, which is very predictable. For that reason, they carry a lot of debt on their balance sheet and usually pay out lofty dividends. With higher rates, it meant the cost of borrowing was less advantageous, and for that reason, the multiples were lower, and there was less appetite for dividend paying stocks. Knowing that rates would likely start to fall in the summer, we wanted to add a couple of REITs and utility companies, and CT REIT was one of them.
Right. And for Canadian Tire is one of the CT REIT contractual, I guess, um, lease leasee up to like 90%.
Yeah, Canadian Tire is their biggest tenant. So CT
Right.
REIT owns the Canadian Tire properties.
Right.
That's what I think you
I
were
tried
trying to
to get
say.
that out.
90,
Okay.
90% of the square footage is Canadian Tire. The other 10% are third parties.
Right. And as we all know as Canadians, Canadian Tire is everywhere.
Oh,
Like
yeah.
they're represented in Ontario at 41% and goes out east and west. So predominantly, I think the most Canadian tires are here in Ontario.
Yeah.
Yeah.
Yeah, absolutely. And so when we were looking at CT REIT, the valuation multiple fell so low that it was almost startling. If you go back to 2019 before the pandemic, this REIT had a multiple of about 14 times its cash flow. It had fallen to 11 and a half times when we were researching out. Just out of curiosity, I thought, I wonder what the valuation was right at the start of the pandemic. And that was the last major market crash that I've seen.
Hmm.
When the lockdowns were announced, I couldn't believe the price changes on some of the stocks. So I went back to the day that they announced the lockdown, which was March 16th, 2020. And so we bought this stock for clients at 11 and a half times cash flow. Guess what the multiple was in March 2020 on the day the lockdowns were announced?
11.5%.
That's a leading question,
Yeah.
isn't it? It was the
Yeah.
same multiple as when there were lockdowns. Um, so this was a screaming buy. It doesn't deserve to it did not deserve to trade at that multiple because it's so high quality.
Hmm.
And if you look at
Yeah.
the so how do we know it's high quality? There's a few things you can look at. Why don't you talk about one and I'll talk about the next.
Well, the dividend yield being around 6%, so a strong dividend yield.
Yeah. Yeah, it's around 6 now. And when we were looking at it, it was 6.7. So that was
Hmm.
really good. The other high quality factor is its occupancy rate. It's 99.4% occupied. So,
Yeah. And
and
they're locked in for
they are,
over 8 years,
hmm,
8-year leases.
yeah. And Canadian Tire, they pay 1.5% rent escalators each year.
Yeah.
So that, and the other 10%, their rents are going up in the high single digit percentage rates right now. So it's just a really good company, and it's up about 16% since we bought it in June. I know that doesn't sound exciting, but rates are supposed to be boring. They don't normally go up by that percentage rate in such a short time. But I still think there's room for further
Hmm.
expansion in the multiple because Right now it trades at about 12.9 times its cash flow. And I think it can get to 15 times because if you look at what it traded at in the early life as a public company, it traded around 15 times. So to go from
Hmm.
12.9 to 15 times, that's, 15 to 20% upside. And while we
Yep.
wait, you get right now a 5.8% yield.
Not bad.
No, not at all.
Yeah.
So this is still a buy and we're happy to own it.
Hmm.
So,
Okay.
all right. Thanks,
Talk to
Eddie.
you soon.